L. Williams here with Elliott Wave Source, #1 source for Elliott Wave Technical Analysis. Today is September 4th, 2013, and today I will go over a couple of key pairs, and that's the Aussie dollar, euro, and the pound dollar. Now let's just start out with the euro dollar. And with this pair, we see that prices have been pushing down for some time now, a little bit over 2 weeks. And in that downward motion, we had got waves 1 through 3 completed. Currently working on wave 4. Now wave 1 followed by what appears to be a zigzag formation, zigzag correction for wave 2, which ended at that 61.8% fib. And then we got wave 3, which extended 161.8% of wave 1. So it found a little bit of support right there, that 130.14 level, and prices have been starting to take off. So with wave 4, we're anticipating that it will end at the 30.2% Fibonacci level, even though I will not rule out a move to the 50% fib, as that would potentially correlate with that descending trend line that we have in place. And we can look to take advantage of a bounce off that again to the downside, where we'd look to enter short. So at this moment, we're just continuing to follow this corrective pattern and see if we can catch it towards the end. So most likely we will have 2 entry limits on this pair once we see prices hit this level and started to rebound. So once we feel that the B wave has completed, then we would put entry limits at both levels. So we put entry limits at the descending trend line and the 50, and then at this 38.2% fib, which is at 323. So at 323 and 327, we would have, or 326 rather, we'd have entry limits to go short, and we look to take advantage of that final 5th wave, which should mimic the movements of that first wave. The first wave traveled slightly over 150 pips. So we would look to see that move in that 5th wave. Now as we shift gears over to the Aussie dollar, the Aussie is showing something a bit different. Now with the euro, we had seen prices just continuing to push down, whereas with the Aussie, we saw prices spread up higher. So we got waves 1 followed by that ABC to wave 2. And we did touch up on this pair last week, and you saw that it found support at this level, and we were looking to enter the pair long. Well, at the beginning of the week, prices pushed higher and continued to push higher, traveled about 300 pips, and now it seems as if it's going to correct a bit. So now as we take a closer look at these subwaves for wave 3, and with that we see that, looking at that, we see that waves 2, so we got that wave 1, and then the wave 2 was a 38.2% correction. And then we also saw that wave 3 was the extended wave, extended by 161.8%. And then now our wave 4, we're expecting that to terminate at the 61.8% mark. So we are expecting prices to push down towards that 0.905 level, and at that point we'll look to enter long and try to see if we can take advantage of that 5th and final wave, which travels slightly over 100 pips. Now shifting over to the pound, this is a pair we're currently in. So we called this out in the middle of last week, as we saw that we had waves 1 through 3 completed, and we were looking at that 4th wave. Now wave 2 terminated at the 61.8% mark. So for wave 4, we were seeing at the 38.2 mark, even though I was not ruling out a move towards that 50% mark. And we also had that ascending trend line, so we're looking for entry levels closer to the ascending trend line. So I stated look to enter along at 154.5, which would have been the terminating point of this ABC corrective move, as this was the AB, and then 161.8% move that would give us that 1.545 level, which we entered long at that point. Well, prices have been pushing higher from that point, and we had about 180 pip moves thus far, so we can look to trail the stops under that at 545. So you can look to put the stops below this recent low, so that would be locking in 60 pips. But our targets are still intact for this pair, as we're looking for 57.5. So we're looking to make 300 pips on this move, currently at 180, so we're just about halfway there. And we're looking for prices to continue to push higher, round out that larger wave 3. So as we take a look at, you see that we already had the 100% mark. So we could also see a move towards that 157. We could even see a truncated fifth wave in this pair. So that's why we will continue to trail our stops in this move. So right now we're locking in 60 pips. As it travels a bit higher, as it travels past that 200 pip mark, then we'll lock in another 50. We'll lock in 150 at that point. So we'll put our stops right below 156, and then we will continue the trail until our targets are met. So that's today's analysis in video form. Any questions or comments, feel free to jump in the chat room, and I will gladly assist you with anything that may come up. So for you guys trading, enjoy the rest of your week trading, and good luck.